update.
Okay, folks, excuse me 1 second. Oh, my goodness. I'm actually okay, folks. I just have a little frog in my throat. This was a chart that was sent to us by one of our listeners. It's from Larry Williams. It's about treasury bonds. And if you'll remember, we had Bill Cerubi on last week. And you'll notice that he was saying that the time between February and March are very, very negative to treasury bonds. And this is what the chart was saying. And there was their high, February 7th. So I called Larry, and Larry, can I use this chart? He said, well, he's retired now. And he says, I'm a little reluctant to do that. He said, what if it doesn't work? And I said to him, Larry, half the stuff I do doesn't work. And he said, yeah, you're right. He said, go ahead. Just make sure you put a caveat in there. And I said, don't worry, buddy, I will. So that's what we were looking at right here. Now, one of the things we're going to look at is, because we're going to look at that treasury bond right now, because it is, hold on 1 second here, we'll get it out of the way here. Oh, treasury bond. I've got so many things to cover today, folks. I don't know which one's going to be first. I'm going to have to pull it up the other way, so hold on 1 second here. The treasury bonds will be right on here, and then we'll be ready to look at it to get this 60-minute up. There's the number we were looking at, folks. Remember, shucks. All right, get this out of the way here. There's the number we were looking for. You can see the exact 618 number right here on the long-term daily that we were looking at right there. Okay, now here's where we are. I said if you get a chance to sell the first 382 retracement on this, you should take advantage of that. If you looked at this today, today's 382 retracement was exactly right there. I mean, to the tick. And you can see here we're almost ready to go below this if that is the case, and I'm not sure that it is, but there's your exact number right there, 29. And it stayed there for a little bit, but not very long. But if that's the case, if you're in that trade, you've made $600, so you're going to have your stop at break even, or at least lock in $100 or something. But if that is the case and it takes this out, this is nothing more than a 2-day rally that didn't do anything. And if you look at it real close, folks, this means that the treasury bonds, even though they say the rates are going to go lower, have a probability to drop another handle down in here, 114. We're 115 right now. So you keep your stop at break even. And that's what we'll look at. Take a break. We'll be right back. 877-927-6648.